The stock market is heavily overvalued here. And no, this is not a license to short. But I want to talk about a very important metric here, the ratio of total market cap over GDP. This is now historically the highest level ever. Why Warren Buffett is selling even more stock, amassing the largest cash position ever, not only by percentage, but also in absolute terms. Why it looks like insiders here, corporate insiders, are not buying stock, and what this means when we see this while the market is still at all-time high levels. Also, it's insanely weird that the VIX has been trading at 19 or above for the last 2 weeks. This is not something that you typically see in a healthy market. The last time we saw this, as a matter of fact, was in the 2022 bear market. And ASML shares are down 23% in the last 2 days as of the time of this recording, after its earnings were leaked, showing that there was softening demand for chip manufacturing equipment. ASML, basically think of it as the company that creates the shovels, right? They are not a chip company, but they create equipment that allows companies like AMD and NVIDIA to create chips or to manufacture chips. So they create the manufacturing equipment. So if you think about it, if their demand is soft, what does that mean for companies, chip companies that have yet to report earnings? Is there some sort of surprise here that could be unveiled? And, as we know, as of late, the entire stock market hinges on the success of these mega cap chip companies. As we see here, NVIDIA and the S&P 500 basically have the same looking chart. So a lot to get into in this market update. You definitely want to stick around. But before I start, I just want to say that we are launching a brand new membership. Actually, we're bringing it back. And you guys have asked me time and time again to open up an investing only membership for those of you that don't day trade. At first, I was really hesitant about it. As you guys know, I day trade live market open every single day, but I know a lot of you are busy, or you might not even be interested in day trading. However, you are still interested in solid stock market analysis. So if you're interested in only the long-term analysis, the stock market analysis, the long-term ideas, and we're even including the option selling channel in there as well. And we priced it reasonably at $35 a month. However, don't sign up for this if you're interested in day trading or trading live with me. You will not get access to that. This is only for those who are interested in long-term analysis and long-term ideas. So let's get right into it. As I said, if we look at this metric, this is the ratio of total market cap over GDP. The way that this is measured, it measures the total market cap of all publicly traded stocks in the US as a percentage of the country's gross domestic product. Now, it used to be that when we hit the one standard deviation line at just above 100%, that we typically tend to see huge pullbacks, corrections, bear markets, etc. And as a matter of fact, the last time we hit 200 was in 2021, and we had a bear market shortly thereafter. We are now at that level again, right? And you can see here, this is 2 standard deviations above GDP, which is wild. Now, I find it interesting that Warren Buffett is still selling a ton of stock and raising Berkshire Hathaway's cash position. So they're either mostly in cash or in treasuries, because treasuries are still providing, 4.5%, depending on the duration of the actual bond or the treasury. But I find it interesting that Warren Buffett is doing this at this time, because we all know that he is a value investor, probably the best ever. And he has said recently that he doesn't see anything of value here. You have to remember that he's not a trader. He's a buy and hold value investor. So he's looking to buy something at a discount and hold it for years. God give him many years, but hold it for years as opposed to just jumping in and out. And actually, historically, if you look at his cash position, the times that he sells or gets into cash, he's not the best timer of the market. And he's admits as much, right? So even in 2000, he had one of the least cash positions that Berkshire Hathaway ever had, right before one of the biggest crashes ever. Same thing in 2008. So it's not like when he raises cash, it is perfectly timed. But all I'm trying to get at is the sentiment here is that Warren Buffett, as well as some other investors, if you take a look at this is from the Sentiment Trader here. I got it on some guy's Twitter account called Jason Gopfert. It just popped up on my feed. But you could see here that corporate insider buys are at an all-time low. Now, this is all in well when the market is in a downturn. But seeing this while the market is still hitting all-time highs, there's definitely something there, right? We cannot ignore this signal here. And as I've stated before, one cannot ignore that the last two major rate hiking cycles, we hit all-time highs right as the Fed cut, just like now. And with Apple pushing almost a 4 trillion market cap, Nvidia well over a 3 trillion market cap, Google and Amazon at a 2 trillion market cap, Meta at a 1.5 trillion market cap. Most of these trillions were added just in the last couple of years. Oh, and we can't forget about Microsoft at a 3 trillion market cap. So we have 3 companies that are above a 3 trillion market cap. Now, before we go any further, I really want to make something clear here, right? Because I see this all the time in comment sections that when we talk about something being overvalued or toppy, or when I say something like, I'm really not interested in buying stocks here, I tend to see comments of people saying, whoa, I shorted, or I bought, I full ported puts or whatever. Guys, not buying stocks does not mean shorting the market. These are very two different things. Okay, shorting is a very active and strategic activity or strategy, right? When you are not buying, that is passive. That just means I'm not buying anything up here while the market is overvalued and I can't seem to find long-term value here. Shorting is a completely different thing. Shorting is a strategic trade that, just like when you're longing and you're trading, right? You have your stop limit, you have your take profit, etc. However, people just look at something and say, oh, it looks really toppy. I think it's time to buy puts. That is not the same thing. And anytime I make videos saying, well, as of now, based on my market update and my analysis, there isn't really anything that I want to buy, people automatically think that means that I'm shorting. And I'm not. I'm not short here, guys, okay? I promise I will tell you when I'm short. Right now, I'm not short. Now, I haven't sold most of my stock either. As you guys know, the 10-year and 2-year uninverted, but what am I waiting on? I'm waiting on the 10-year and 3-month, and we're not quite there yet. Here's how the 10-year and 3-month looks. We are quite a ways away from uninverting. As a matter of fact, if we take a look at the actual details of the bond rates, you can see here, as of the time of this recording, the 10-year is paying 4.026. The 3-month is paying 4.6882 annualized yield, right? So still very far from uninverting, meaning the 10-year paying more than the 3-month. And although historically October during election years is not a great month, November and December are. So, I'm not trying to sell here if the NASDAQ is going to start inching forward towards the end of the year, or some of the small caps might start inching up, or the S&P 500 makes new highs. Like, I don't see a panic here to sell yet. Now, in terms of opportunities, what happened with ASML is their earnings leaked, and it showed that their bookings were basically half of what they were expecting. So if we take a look at ASML's orders and you look at this Q3, 2.6 billion is the order value, right? But this is a little more nuanced. If you look at last year, ASML had the exact same order value, and it also happened in Q3, right? Q3 being the downturn quarter, as you can see here, just like in 2024. As a matter of fact, this looks very close to 2023. You had a strong first quarter, a stronger second quarter, a bad third quarter, and then Q4 was strong. So as of the time of this recording, a stock that was once worth $1,100 is now down 22% in 2 days, and it has a stock price of $683. Now, if you take a look at ASML, and this might be, one of the best opportunities around that you'll find, because there isn't much value around. But I want you to take a look at ASML's long-term chart. It has been in an uptrend since it IPO'd in 1995. And if you take a look at since 2008, it's on this steady uptrend here using a logarithmic chart. And yes, although it's trading at around a 36 PE ratio, if you look historically, that is around what ASML trades under, right? It trades in the 20s to 30s. Its PE ratio is consistently in that range. And I think that this could be a sleeper pick going into Q4, especially if AMD and Nvidia report strong earnings, and it shows that, hey, the lack of orders or the lack of bookings in ASML is not coming from the chip sectors, NVIDIA and AMD, and it's not coming from the AI sector either. As you can see here, it says in areas such as artificial intelligence accelerators, company like NVIDIA can't keep up with demand, but in other sectors, including automotive and industrial, it's in a prolonged slump with customers cutting back orders because they have too much inventory. ASML lowered its guidance for 2025 total net sales to between 30 billion and 35 billion euros compared to as much as 40 billion previously. ASML didn't give a detailed explanation of why its bookings fell short of estimates beyond a few delays in plant constructions. So to me, the worst decline in 28 years, my ears are definitely perked up and I'm looking for opportunities here. I will definitely be sending them out in the trading and investing floor. But for sure in the 600 range, I'll be interested in ASML, especially if it hits this trend line here. And in terms of Tesla, yes, the Robotaxi event was disappointing. It did have some highlights, but I think what was disappointing about it was the lack of details, right? And I think people wanted some more explanation on how this business is going to scale. They wanted to see if there was maybe some sort of app component that they can look at that's associated with Robotaxi. And it just seemed like obviously the Optimus robots were remote controlled and that wasn't an autonomous voice. Nobody really knows if those Robotaxis were fully autonomous or if they were pre-programmed to get to destination A or B. So I think there was a bit of lackluster there. However, Tesla's earnings are coming up October 23rd. And usually this is where Elon gives a little bit more detail as to the financials of upcoming projects. So in my view, if Tesla can convince the market that, hey, actually there is a roadmap, and there is a roadmap where we can sort of determine some sort of worth of the future, not only the rollout, but also what this business will be worth to the company, then I think that Tesla's stock price can actually continue resuming. Obviously, I'm not Tesla, I'm not Elon, I don't know what they're going to say. But historically, we've seen very little detail provided in these types of events, and we've seen more detail come along during the earnings calls. So I'm going to be monitoring to see, I still think 220 is an okay price for Tesla, but I definitely want to see what they're going to say on the earnings calls, because any sort of information that will give the market a sense that they have an actual roadmap and that roadmap will lead to significant growth for the company's top and bottom lines, I think that is when we're going to start seeing another rally in Tesla potentially. If they fail to do that, obviously, then all bets are off, and I think that Tesla can continue going lower. But other than that, I will continue to look for strategic buys and plays like ASML, like we did with Google and CrowdStrike recently, as well as Nike when that hit the 70s. The last buy on NVIDIA was $99. So I am strategically picking things up when they hit my buy price, but I'm not just gratuitously buying things here at the all-time highs. Just like Warren Buffett is saying, to me, there isn't much value here. There is some, but there's not a ton. Anyway, traders, let me know your comments down below. Are you buying anything? What are you buying? Have you recently moved to cash? Are you waiting on the sidelines? What are you waiting for? Do you think that we hit a recession next year, as most are predicting? Do you think it's going to be a bad recession or a shallow one? Leave it in the comments below. And if you want to sign up to the live daily trading with me, obviously that's always there. But the new investing only tier, you will also find that below. So join, $35 a month. You will get all my long-term insights and plays. I'll see you there. Stay safe out there, traders. Peace.